Now for the debate. What I'm going to do is I'm going to have a opening argument by both Harry and Michael. I'm going to get Michael to go first, and I might just ask Michael to be tuned in. Now I see he's on mute, but Michael, I need you to unmute yourself and turn on your camera. That's good. Got your camera. Michael, welcome.
We're good.
Good on you. Well, it's good to have you here, Michael. Look,
Glad to be here.
Good on you. I've read so much about you and your success, and you're a pioneer. You have been able to do incredible things in the cryptocurrency space, and you're a bit like the Godfather. You've been pulling all the strings, and we're thrilled to have you on the program. It's a real honor, and we look forward to hearing you during the debate. But just up front, we'd like you to kick off. Just by the way, what part of the world are you in, Michael?
I'm in San Juan, Puerto Rico.
Michael, does everybody live in San Juan?
Everybody wants to save on taxes who are U.S. citizens and investors. Yes, we're getting most of them down here.
Well, because we had Peter Schiff, he's in San Juan. We've got Harry Dent in San Juan. There's Michael Turpin in San Juan. What the heck's going on?
Great weather and great tax savings, and a community. I was the first person to move to San Juan from the cryptocurrency world 5 years ago, and now there's almost 400 crypto investors and traders and entrepreneurs down here, plus a lot of traditional hedge funds, you know, like Peter Schiff is down here, et cetera.
That's right, which is fantastic. Well, look, Michael, we have a huge audience watching you, and I'd like you to give us an opening argument, and then you can throw back to me.
Sure. So we're here to talk about Bitcoin. Bitcoin, of course, was the original cryptocurrency. It was the original blockchain. There would be no other blockchains if it wasn't for Satoshi Nakamoto. I encourage everyone who is new to Bitcoin to go and read the white paper. It's not very long. It's 8.5 pages. And it came out right at the end, or rather the start of the 08-09 meltdown on Wall Street, and really turned out to be a global meltdown. And it was looking at how the people could go and use technology, which has solved so many other problems, to go and make a peer-to-peer system of value, a peer-to-peer system of money. And that's really the title of the white paper. And if you think about it, we sort of don't remember, the days before central banking and before the Fed, because we're, under 100 years old. For the US, and obviously was there even longer in Europe. But in the ancient times, people used to barter, and they didn't have governments going and saying, you can't go and trade that fur pelt for those seashells or that cow. Nope, nope, nope. There's rules and regulations. Where's your KYC? Where's your AML? So this is all sort of modern constructs. And the typical person who wants freedom and wants to be able to control their own destiny, that's why gold has been popular for thousands of years, because you can hold your own gold and you can put it in a vault. You can even put it in a vault outside the United States. That's why it was threatening in the 1930s, and when Franklin Delano Roosevelt made it illegal to own for all those years. And then right around the same time, it became legal to own again. And in the 70s, we went off the gold standard and onto the fiat system. And that's when the money printing all started. So why Bitcoin is the answer to sort of, just hedge against all this money printing, hedge against the manipulations that have been fairly famous, even in the gold and silver markets, because Wall Street has so many derivatives of them. With Bitcoin, I encourage everyone to read a book. It's not my book. My book is going to be coming out later this year, called Pandora's Blocks, which will go beyond Bitcoin into other cryptocurrencies and how blockchain is going to really create a whole new world in the next 10 years. But the Bitcoin standard was written by a Lebanese economist that I can't properly pronounce his name, but if you look on Amazon, it's literally sold out right now in hard copy, but you can still get it on Kindle. And it explains why Bitcoin is going to become a proper new way of looking at value instead of just gold. And the World Economic Forum is already positioning itself to come up with an international unit of currency that's beyond the U.S. dollars, role as the world standard. They're talking about the Great Reset. These are all scary things. So Bitcoin, unlike the stock market, has cycles, but they're not 10-year cycles like the stock market has had. They're 4-year cycles. And this was programmed into the code. The first 4-year cycle, when it was just geeks and freaks, let's call them, who were involved in Bitcoin. And they're the people who got most of the available Bitcoin, 10 million of the 18.5 million Bitcoin that are available now. And the remainder, which is only 2.5 million for the next 100 years, because it's this declining value that every 4 years you go buy code and chop the amount of new Bitcoin in half. Imagine OPEC does this with oil, right? They say, oh, we're gonna, make sure that our fellow countries don't go and release too much oil and the price goes up. But they do it at their whim, or not on a schedule you can rely upon. What if every 4 years all the governments of the world said, gold makers or gold miners, you have to stop making as much gold. You have to go by decree and only sell half as much gold. Well, the price of gold will be a lot higher. That's what you have with Bitcoin. Every 4 years, you have what I call Bitcoin spring, which is when the seed of the new halving is planted and the amount of Bitcoin is cut in half. It was originally 50 new Bitcoin that can be mined very inexpensively on your own home laptop. A wallet was an instant miner, and it was 50 Bitcoin every 10 minutes. Then 4 years later, it was 25. Then 4 years later, 12.5. Now it's 6.25, and it's going to keep going down for the next until the year 2140. Meanwhile, you've got rising demand. This is really the first 12-month period that the institutions have gotten involved. You now have more than 100 million people who own at least some Bitcoin. When I first got in early 2013, there was barely 1 million people. When they had the first halving, it was in the couple hundreds of thousands. The first 2 years was in the hundreds. So when you have rising demand and shrinking new supply, that's when you set up Bitcoin summer. So the first year of the halving cycle, so that was 2012, 2016, 2020, 2024 in the future, 2028, going until 2140, when you have the last Bitcoin mined, you have Bitcoin spring. And that's when the price starts to go up, just because they're thinking, well, it's going to be harder now to get new Bitcoin. And so maybe the price will eventually go up. It takes usually about a year and change. And it's historically now been almost to the date, November or December of Bitcoin summer. 2013, the price went from $12 at the halving to $1,200 at the all-time high in November, late November of 2012. Then you had the next cycle with 2016 was the halving at $635, and then you ended up having it go up, December of 2017 to 19,300. Well, in the meantime, because you're sort of overshooting maybe by a little bit where it should be, it then goes down and people start going, oh, Bitcoin is dead. It's a crash. It's a crash. No, it's simply Bitcoin fall the year after the summer. And it slowly deflates. And then typically your bottom of the market so far, remarkably, has always been January of the year after Bitcoin fall. And that starts Bitcoin winter, when all the pundits come out and say, Bitcoin is dead, Bitcoin is dead. No, it's not dead, but it's winter. But every winter we seem to get slightly nicer fur coats, because the first Bitcoin winter, the low price was around $40. The second Bitcoin winter was $150. This past Bitcoin winter was $3,500. If it goes up to 100,000, as I'm predicting as the high, and even Harry is saying that the top of the bubble might be as high as 300,000. Well, even if it crashes, historically it's been 85% in a year and a half after the summer. From 300,000, that's still going to be 45,000. If it only gets to 100,000, it'll be 15,000. That's still not that much below where it is today. So you end up in my trajectory. You don't day trade, but you buy during winter and you sell during summer. And I guess that's sort of my. Do I have anything more in my 10 minutes? I know I started a little bit late to talk about institutions coming in, or I could just hand over to Harry for his point of view.
Michael, that's fantastic. Just people are asking, can you just give us that information on that book again?
Oh, the book is called The Bitcoin Standard. Just look at it like the gold standard, but it's called The Bitcoin Standard.
The Bitcoin.
It's written by a Lebanese economist. The Bitcoin Standard, like the gold standard.
Yeah.
But it's called The Bitcoin Standard.
Gotcha.
And it's sold out on Amazon. I have nothing to do with it. Just that it's probably the most recent book that explains in terms the average person can understand why Bitcoin is a valuable standard, like the gold standard, to rely on as a commodity that acts like money, but is a commodity.
Thank you, Michael. And now, if I can call in Harry, are you there, Harry?
Yes. Can you hear me, Greg?
I can. Harry, always good to have you on the program. You continue to upset people all over the world because you have an opinion. And that's what we like about you. You're not scared to give your opinion. And I encourage that because, a lot of people at the moment are doing crazy things throughout the world, and you're trying to show a bit of sanity. So keep that up. But Harry, I'd like to hand over to you for your opening argument. Thank you, my friend.
Okay, thanks, Greg, and thanks for coming, everybody. I am so lucky to have Michael Terpin and a number of crypto people down here. This is a very complex industry, as I'll also talk about later. I do really see this is the next big thing because I look at new industries emerging all throughout history. That's my expertise. I don't know a fraction what Michael Terpin knows about this industry. He knows it inside and out. But I do know it is emerging, and when something bubbles this much in the early stages, it's saying something. Only the internet, of all the big innovations, PCs and biotech, and I could go on, and only the internet in the late 90s and early 2000s bubbled like this, and now only Bitcoin and blockchain. So it's telling you something. I always say that the best quote I heard, blockchain is the digitization of all money and financial assets. You know how important that is? We have $37 trillion of money in the world, M1, 91 if you count, M2, it's all stuff. 252 trillion in debt, but guess what there's the most of? Financial assets, $520 trillion, over 6 times global GDP. So the internet allowed us to communicate and link and email and some commerce and stuff. But today, credit cards are terrible. I mean, I have to replace my credit card every 3 to 6 months. It gets hacked. It's 2 to 3% fees to the merchant, on and on and on. So this basically transforms what the internet could not. It is Internet 2.0. It's what makes the internet work for things of value. And of course, that's got to be more important than ever. So really quickly, people that know me, I'm going to emphasize 2 big picture things right off the bat. We are right at the top of the biggest cycle in stocks, period. Most people don't even see this. It's so big, it's so long-term. Every 90 years, every 2 technology cycles, we get a super bubble. 1840 crash into 42, 1929 into 32, and here we are 91 years later in the same position. This is where you get the biggest crashes in history. And that's what's important to know. And then the second thing, another very important long-term, for bottoms, there's no cycle better, and this is right on my generation cycle, 20, but more important, 40-year cycles. Look at this chart, the biggest lows and generational lows, 1942, 1982, and the next one, late 2022. So we have the greatest bubble, even greater and more pervasive than 1929, about to crash, already started before the whole COVID thing got them to print twice as much money than ever, getting ready to crash in just a few years in the late 2022. Give or take. That's the big picture. Nobody's going to see this coming. And guess what's emerging at the top of this bubble, just like it did the one before? Blockchain and Bitcoin, just like the dot-coms came at the top of the last tech bubble. So this is the way I look at things. Simplest picture. When you talk about technologies, S-curves, they come slowly at first. They're growing rapidly, but they're small, slowly at first. And we're at the early stages of this. So internet became public knowledge. 1993, took off slowly and then birth. Now we have 16 years later, blockchain starts in 2009 with the public domain of the open source code, and starts early and is getting ready to accelerate. If you take both of these S-curves overlapping now note, The reason that the new technologies, when they're so small, bubble so much, they're coming out when the last big thing is in their final bubble, looking like, oh my gosh. And so people infer this on the new, which is true, but they don't realize it's going to take 15, 20 years for this to happen. So that's the big area, and they get overvalued. But again, these two S curves, every 45-year technology cycle, and that's my most important long-term cycle, more important than demographics when it gets down to it. You get two of these, a radical one, internet, wow, something totally new, and hey, let's really make this big and financial. That's this S curve. That's why it's such a big thing. Now, in December, I put this out in my newsletter. Oh, guess what? We just go through those 2 4-year tops Michael was talking about, and right in December, as he said, I said, oh, well, the next resistance, Bitcoin is going to be 34,500, and it could hit it quick. I know people are going, oh yeah, that could happen, Harry. Boom, 1 month, bam, 34,600, backs off, and it broke through that. That's a sign of strength. On the other hand, it just broke back under it, which makes it a question mark. So I'll look, there's scenarios where we could go near term up as high as 82,000, and then, or we don't make it back, and we start to come back down. And like Michael said, this is an early stage industry. There are always big crashes and volatility, but I see the target as low as back to that 32.16. That was the low off the first big high near 20,000 in 2017. So again, this is a linear section right now. Once it broke this thing, I pull out. I didn't show this in my newsletter because I thought people would fall over and die. This is the exponential chart, and this is the most exponential bubble we've ever had. And if we look at an exponential chart, this same trend says, oh, wait a minute, this thing keeps going. Now that it broke this first linear trend, the target near term would be 160,000. And by the end of the year, on that 4-year cycle Michael's talking about, and that is a very concrete cycle thus far in this industry, end of this year, it could be as high as 300,000. But again, I would say still, 1, 2, 3, 4, 5, that's L8 wave. This is the first big wave up of a new technology. It's going to boom like crazy for 20 years, not just for even a decade. And it's just the first wave up, and it should peak after the 5th wave. So I expect the next crash could be a little bigger than those 84%, and then we're off to the races. Now, again, just for perspective, I map out here. This is the internet and the internet index. Internet came late in the tech bubble. Only really took off in 98 and went up 12 times in a year and a half, and then crashed 95%. Okay, and then it took a while to get off the ground, and now we're in what I call the maturity boom. And then, just like that S curve says, coming into 2020, 21, we're in, and then we get a big bubble at the end. So this is the way new industries emerge, and the greatest volatility comes right in the beginning. The quickest burst and the quickest down. This doesn't mean something's wrong. You have to understand, a lot of companies have to shake out. You had 140 auto companies shook out. Right now, 48% of the internet companies, 199 Mary Meeker internet stock companies in this first bubble, 48% did not only survive. 52% went under in that first crash, but there were still 100, and they get bigger and better. And you know what? They do better. I took this chart, is more important. It's logarithmic to make it a little more clear, more in perspective. But it looks at the top line is, again, that internet index. The bottom line is one of the leading stocks, Amazon. So think like Bitcoin is the leading one in this, Amazon back then. Amazon went up 107 times versus 12 times. Crash though, even though it's a leader, even though it survived easily in that case, still went down 94%, and then went up 100 and some times, versus 23. So what happens as the industry emerges? The industry doesn't do as well as the companies that survive. So many companies are going down to fewer. So you can see the returns on Amazon were astronomical. And I'll just leave you with this chart. If I just take Bitcoin today, if Bitcoin doesn't go a dime past 42,000, it just hit, okay? And it could go to 82, even in one of my scenarios. If it stops here and then corrects on this similar curve to Amazon, leading stock, it could be $500,000 a coin, and that takes it to $10 trillion in value minimum. And that can replace gold as a standard. And again, one of the things about Bitcoin, it is seen, I think it's so popular and it's hogging the show because there's a lot of companies that really produce products and blockchain applications. Bitcoin is meant, it seems to me, and is being seen as a standard, and that's why it's so popular. It may or may not be necessary, because I'm talking to people down here with all the crypto people Michael's talking about, you know, that really describing stuff to me like Alex Lightman, like, well, you might not even need a standard. This thing just so bottoms up. Bottom line, people, I love this. I'm just warning that the biggest crash is coming yet, and that's when I would buy this hand over fist, and you can't be out of it because it's so strong anyway. That's just my advice. But this is what I've been looking for. I hate central banks. We're in a 250-year revolution of my cycles. The first one took down the Catholic Church. Next one took down monarchies. I think this one takes down central banks. We need a bottoms-up monetary system that's global, not hackable, not manipulatable, or very hard, and does not have central banks controlling everything and creating the type of imbalances we're going to see crash worse than ever. So again, that's just my introduction. I am as bullish on this industry as Michael. I just didn't see it as early as he did, but I do see, and this has happened every time, it happened with autos too, and every other industry study, there is that first shakeout that is brutal. Maybe it doesn't happen this time. I am not betting against history.
Okay, thank you, Harry. Now, look, Harry, as a gift to everybody, we're going to give a copy of these slides. Are you okay about that?
Yes.
We'll give
yeah, the slides can go out, yes.
Okay, we'll give the slides. And for those watching on YouTube, because this will be going on YouTube, you'll be able to click on and also get a copy of these slides. And also, Harry, as a special bonus, you're going to get, for those who stay on the program, we're going to get in about 3 or 4 weeks' time, a copy of your February newsletter, which will be speaking exclusively to Bitcoin. And everybody who's on this program, and also there's thousands and thousands on this program right now, and you're going to let everybody have that. Is that correct?
Yes, I have to wait a few weeks for my subscriber. Yes, we're going to sound, again, this issue is focused 90% on this exact topic here with a lot of slides and discussion.
Fantastic. All right. For those of you on YouTube, you'll be able to get a copy of that as well by clicking through. Our staff will have that made available. All right, now for the debate. Look, you know, I have so many people, to Michael and Harry, I have so many people who happen to stop and speak to me and they say, hey, Greg, is Bitcoin a real asset class? Is it here to stay? Or are we going to wake up one morning and it's gone? So I'm going to start off with Michael to answer that. And Harry, you can come in on straight after, but is this the real deal, or is this going to disappear one morning and we wake up and go, well, that was an awful nightmare? Michael, can you hear me?
I can hear you, and it's the real deal. 12 years, and at its peak when it hit 42,700 billion, and I believe it will be well over $1 trillion by the end of the year. If it hits, $100,000, or even here is $82,000 per Bitcoin, it will be larger than silver. Is it class? I mean, clearly it is. So yes, I think it's here to stay. And the reason it's here to stay is because it was the initial one, never been hacked. People who have individual electricity, and as long as there is the internet, you will have Bitcoin. And it's too big to fail at this point.
Harry.
Well, first of all, Bitcoin is the first blockchain currency, okay? And it does have the potential, if it does need a gold standard, it's not going to be gold. Gold is clunky and gold is limited and stuff. And there's something I said before that needs to be clarified. I'd say Bitcoin could get up to 10 trillion or more. But gold Gold is about 10 trillion in total value in the world, but only 3 trillion of that is used for investment purpose. You can't, it doesn't matter jewelry. It's not the same thing. Bitcoin is entirely a digital monetary standard if it's accepted as such and needs to be. The only reason it wouldn't last way down the road is because this industry is so successful at being bottoms up with much finer transactional based currency. I mean, my thing for this industry, transactions are the holy grail. It starts with money transfers, and that's just off the chart. But when you can do all transactions at the speed of light, highly secure, at fractions of a penny, instead of 2 to 3% on a clunky credit card that gets hacked every 30 seconds, that's a revolution. And so if that became so efficient and accepted from the bottoms up, there might come a point where you don't need it. I always wondered why you need gold. If everybody trusts something, it could work. But Bitcoin is the only thing I see that has a shot at being that standard like gold. And that would require, it would have to go much, much higher. And also it'd have to be owned not by 2% of people in the world or something, but by a much higher percentage, and then it would be traded more and it would be more stable. The biggest reason people say, well, Bitcoin can't be a standard or for money is because it's too volatile. It's because it's 1 year old. Okay, it's going to grow up, and it is way better than gold, much more divisible. There's nothing great about gold except everybody's accepted it for centuries.
Could Bitcoin or cryptocurrency eventually replace fiat money? Harry, what do you think? Could it replace?
That's the whole point to me. That's exactly what I want. Okay, think in the United States, 50 states, we all had our own currency. Is that nuts? Well, Europe's been doing that until recently. It's nuts. It's nuts. You got to change it. It costs money to change it. It's hard to understand. Why wouldn't there be, and that's not going to happen overnight, one global currency? If it needs a standard, it would be Bitcoin. I don't see anything else big enough or trustable enough to do it. And everything's on that. Everything's based off of that. It is that one thing, and you buy everything with that one currency and or fractions of it or variations of it. Yeah, the whole point is it to become the currency and the means for purchasing and transferring all things of value.
Michael, what do you think about that?
Well, the only problem that Bitcoin has is that it doesn't have armies. And so we are going to be heading, I think, inexorably toward a global currency. And it would be great if it was Bitcoin. You know, it's Vinny Lingham, who's a friend of mine, who's one of the first people to predict $1,000 Bitcoin when everybody else never thought it was going to get much past $100. You know, he said that we're shooting too low when we're trying to become store of value to replace gold. We should become unit of account. Because if people quoted things in Bitcoin instead of dollars or euros, that's a much larger market. That's, you know, 80 trillion instead of, or more, instead of, you know, 10 trillion. But I think what prevents that is, quite frankly, I mean, gold is good enough, quite frankly, because you have all the other blockchains, all the other cryptocurrencies that price themselves in Bitcoin typically. If you're really trying to, you know, take true profitability of what you have to say, what is it against Bitcoin rather than against the US dollar if you're buying Bitcoin, using Bitcoin to buy it. Bitcoin, for example, is not a very good means of payment right now because it takes 10 minutes to confirm a transaction. There are many other ones that are instant, many of the EOSIO cryptocurrencies like Telos, TELOS is one. It's TLOS is its ticker. Is one that you know, literally you can get paid and there's no fees, and it takes like a second or so.
People don't understand something I hinted at earlier. Central banks have become gods. They control everything: interest rates, asset prices. They can single-handedly cause the stock market to just keep coming up, at least keep rich people feeling rich and spending more money, even when Homer Simpson isn't. And that's what's happened. We don't have a 1.5 to 2% economy. We got 4% on the rich side and 0 on the Homer Simpson side, okay? What I see happening here is central banks, and that means government with them. People, you got to look at that first chart I showed. You get a 90% crash in stocks and a bubble burst of this magnitude that's nobody's seen in their lifetimes. You have to go to 2932 to see it. governments are going to lose a lot of credit. Everybody says, well, governments will stop it. Yeah, governments will do all types of, they're not going to have any credibility. I tell you, central banks, you know, are going to have the least credibility of anybody. So that's where the door opens. It's not going to happen overnight. Bitcoin's not big enough. We're still not accepted enough with these currencies. But I think people are underestimating when they say, well, governments will do this. Well, yeah, maybe if they go to war or something, because, and maybe they will, but I don't see anybody to fight. China can't lick us, and nobody else can that I see. I'd be more worried about China and India going to war, but I just don't see the central banks having credibility here to block something that people like.
But they can win an economic war. Sorry about the cutout Puerto Rico, but we don't have the greatest Wi-Fi. I moved to another room that didn't have as good lighting, but had better Wi-Fi. So hopefully I'll be fine for the rest of the debate. What I was saying was that the World Economic Forum actually has this year's theme, the Great Reset. And if you Google that, there's a lot of folks talking about how the way out of debt is to basically find a way of just saying, you know what, we're going to just simply start over and wipe out all the debt. We'll print some new money and give it to our friends, but everybody who's owed, you know, money, it's just going to go away, and the dollar is going to go away. It's all going to be part of a bucket of currencies that will be the global unified currency. And, you know, China has to buy onto that, because if you have the RMB and then everybody else is using the unified euro dollar brand, everything else, it'll be very interesting. But if you have a truly, you're then going to have Bitcoin. If they're not part of the bucket, Bitcoin right now is the currency in the third world. Nobody in Argentina wants to take the peso. Nobody in Africa wants to take their local currency. They're all taking Bitcoin, which is why every time there's a dip, at least this time around, it's sucked up by institutions and by the third world.
Real quick, like people also don't understand everything everybody's talking about, resetting debt, all the stuff. The markets did that in 2 or 3 years in the 29-32 crash. You know, 40-50% of private debt disappeared and then continued. It happened overnight. Governments saying, oh, we have to do all this and we have to do that. They're the ones that created all this complication. And now when it crashes, they're going to come up with some grand plan. The markets will handle this overnight if these assholes just get out of the way. I hate to say it. And that's what happened 29-32. Sure. We didn't have money printing back then. We invented it just after that. But this is money printing, and all this stuff works against just like the doctors tell you, the body knows how to heal itself, the economy knows how to heal itself. This debt in a crisis can be flushed out and restructured in 2 to 3 years.
Okay, now gentlemen, Bitcoin is only 75% above its previous all-time highs from 2017. And in 2017, the bubble did not pop until Bitcoin was above 1,600% from its previous all-time highs in 2013. So is this a bubble, or is this just the start of an almighty boom?
This is the start of a big bubble. So in other words, bubble and boom, what's the difference, right? If the boom is perpetual and never goes down, then, you know, I mean, that doesn't happen in the real world. So, I mean, bubble does not mean it's phony. You know, the internet was a bubble, but it still continued and became a bigger bubble. And it just goes through cycles, as I had mentioned. And there's things other than the 4-year timing that can accelerate or decelerate the cycle, like money printing, like people getting excited too early. But I believe this year we're going through a double bubble scenario, which happened in 2013. In 2013, you went from $12 at the halving up to $250 in March. And that happened because Cyprus, where a lot of Russians had moved their money to sort of, you know, get it out of Russia, all of a sudden started doing a tax on wealth, and they started like seizing bank accounts. And so all of a sudden people got their money into Cyprus and put it into Bitcoin. That was one of many things that happened, the crashing of Mt. Gox not being able to take as the only exchange in the world at that time. When Bitcoin Jesus, Roger Ver, bought 250,000 Bitcoin all at once, they could handle it at $1 a piece. So people lost faith. It went down to 40. Bitcoin is dead. Bitcoin is dead. That was the best time to get in. So in many cases, somebody in the chat earlier had asked, is this a good time to buy? the best time is to buy in the middle of Bitcoin winter. But if you're in the middle of, and you do your own research, this isn't financial advice, but if it looks to you like it looks to me like a double bubble, and then we're going to be at 80 or 100 or higher, you know, we're right now at 30. That's not too bad to have a good shot at tripling your money by the end of the year. Even if you do have a chance that it may take longer, I think there's a very, very low possibility that if you bought at 30,000, that in the next 10 years, you wouldn't be able to double your money. I personally think it'll be this year.
Harry?
Yeah, you know, bubbles are where it gets exponential very quickly. There is a difference, in my view, from bull markets and bubble. Bull markets go up over long periods of time, typically 26 years for stocks over a generational spending period. And there's ups and downs along the way. But only at times, only 95 to 2000 did the market start to get in that exponential bubble-like mode. And most of that came because of the dot-com stocks between late 99 and early 2000 in the last year and a half. So even in a normal bull market, there are bubbly parts. And this beginning phase of Bitcoin and blockchain is clearly bubbles. Every 4 years, almost all the gains are made in less than a year, every of these 4 years, and most of those are made in just a couple of months. And so that these surges every 4 years are extremely bubble. Now, how do I tell this? You know, Greg, you've seen my presentations. I have the Masters and Johnson's male orgasm chart. And that may sound silly. I can put anything, birth chart, you give me anything, I don't know what it is, I'll put it against that chart and tell you if it's bubbly or not. So some things are entirely bubbly for a period of time. Other things get bubbly at time. But when you see this exponential thing, nothing can go up that way for too long. That's when you get cautious. And like Michael said, even here, this well could go into the end of this year. Even if stocks crash on my scenario, Bitcoin could act more like gold in the early stages, which gold went up in 2008. It crashed in the end before it goes down. My crash might not happen until late 21 to 22 and happen very rapidly. So you do, when you do see something like this, when it gets exponential, okay, that's a sign this thing's got juice. But once it's gone exponential, yeah, I would wait. We got a pullback now, 30% or so, okay? And then the longer it lasts, the better. But if it does this and doesn't just collapse, then yes, there's probably going to be another exponential surge. So you buy on the corrections. You're either sitting there waiting, knowing when like Michael says, the spring to summer move is going to come. And then when you get these corrections go into winter, and then you get in there again, because it's not easy to time this. This is a very powerful thing. Exponential moves do happen quickly, and it's very hard to time. So you're going to have to be there. But I certainly wouldn't have been buying, at 42,000. But hey, if it sits here at 28, 30,000, if it can settle here for a while, yeah, there could be another big move into later this year.
Okay, thank you. Michael, I've noticed, of course, that Bitcoin, it jumped up to about 41,000, and now it's sort of progressively gone up and down like a yo-yo, hanging around from 29,000 to 31,000. It's sort of been hovering and whatever. But I want for everybody at home to grab a pencil and paper, because I'm going to ask Michael and Harry a question. So, Michael, what do you believe this next 12 months? What do you believe that the price will be of Bitcoin by the end of this year? And you've got your own charts, and you obviously have your own methodologies. And what will it look like at the end of the following year, the end of 2023? I'm going to write it down. I hope everybody, wherever they're watching or listening, does this as well. I'm going to put you in the furnace here, Michael. What's your prediction over the next 12 months and then the following 12 months of this Bitcoin number?
I'd have it 100,000 in December this year. And then I would have it probably down to about maybe 45,000 and going lower by the end of next year. And it probably won't hit its low for the cycle until early 2023.
So you're saying,
and that's when I'd be buying again.
100,000
because
100,000 by the end of
100,000. So see by the end of this year, and it may go considerably higher. I'm going to probably start selling things, at 50, at 75, at 100, and then see sort of if there's usually one parabolic boost that happens just over a couple of days. And that's where you want to sell everything. And you look at the charts. And most people can't because they're emotionally involved. I'm a limited partner in a fund in the UK that they algorithmically trades Bitcoin. And they sold everything on December 20th. And the managing director, I said, did you sell? He goes, no, I was too emotionally attached. I sold quite a bit because the algorithm said, but I thought, well, maybe the algorithm's wrong. And in that case, the algorithm was spot on, and the fund sold 100% of its Bitcoin, and then it bought it back, at 3,500. So, algorithms, and they're getting more and more sophisticated algorithms in a number of these cryptocurrency hedge funds. So this is something that will become more and more just the landscape, because you have to remember how far we've come. When I first got into Bitcoin in early 2013, there was only one exchange, and it was run by a guy who'd never run an exchange before. He had run a tea house, and he named the company after his cat. And it was just, and you as Americans, the only way that you could go and actually buy it was an entrepreneur who's a college kid, Charlie Shrem. He's actually in Puerto Rico this week. I had dinner with him the other night. He's coming over to my house tomorrow for lunch. He basically started a service where you could go in and go to like a CVS, like a green dot card, one of those cash now, but you can only do $50 at a time, and hand them $50 of cash, and they would use that cash and give it back to Charlie's company called BitInstant, and they would then wire it to the whole amount for the day to Mt. Gox, and then they would get back Bitcoins based on faith and trust. And at the end, all of a sudden it blew up. But a lot of people got very wealthy by, buying. My partner in BitAngels was buying $50 every day. We'd go down every day and buy $50 when it was $3 or $4. And, now you've got, none of those things were regulated. Now you've got hundreds of exchanges around the world and algorithms and trading bots. And, it's really looking a lot more like Wall Street than it did in the early days when, before Mt. Gox, you couldn't even buy Bitcoin unless you went onto a chat group, and then you just did peer-to-peer. So it's come a long way.
So you're saying 100,000 plus, it's 30,000 now. It's a bit of a bargain right now, 30,000, but of course it could then take a bit of a dip the following year, and then it could then rise again. Okay, Harry, over to you.
Okay, my newsletter subscribers hate me for this, but in the long term, I always have one scenario, okay? In the short term, I almost always have two, but trying to resolve into one, because the short term has far more political and more cycle. It's probabilistic, not deterministic. To me, what's important, and it's not going to take long for this to happen, stocks are looking like they're getting ready to crash. The key thing here, if stocks start to crash, does Bitcoin go with them, or does it go like gold against them? Now, I'm telling you what my bias is. What it's done so far, it's gone with them. First bubble in Bitcoin late 2017, first bubbly peak in stocks, and they both went down together. I see Bitcoin, like the dot-coms, as the bubble of the bubbles. It's the greatest new thing. It's the most bubbly. So if stocks go up X, Bitcoin goes up 10X, okay? And then if they go down. So I'm inclined to think when stocks start to crash in 2021, I think it's sooner than later, that Bitcoin will go down with it. And that it will eventually bottom similar time, Michael says late 2022, early 2023, same for stocks, by the way, and then have a more stable, you won't see this 80 and 90% bust anymore, a more stable long-term rise, because things don't stay this way. So I would lean towards saying we may have one more quick move up, 62, 82,000, and then we start to crash. Scenario number two is Bitcoin does start acting. And the only reason I say this is possible, the institutional people Michael's talking about coming in, and only recently, they are substituting it for gold. That's what they're looking at. Paul Tudor Jones is buying it as an inflation hedge instead of gold, as a more powerful inflation hedge. So if that's what they think it is, I do not think it's an inflation hedge. I think it's the next digital monetary framework, okay? And I don't think it's a safe haven. I think it's anything that bubbles like this is not a safe haven when it goes down. But it could go up into that 4-year cycle Michael's talking about, while stocks go down at first and then crash to follow it. So in that scenario, it could go much higher later this year. But I'm not going to go with that scenario until I see it diverge from stocks. And I'm still leaning towards when stocks crash, Bitcoin will crash with them. And it may just have one more strong pop up first. And I think it will be down, depending on how it goes, somewhere between 3,000 to 4,000 at worst and 15 to 20. Another thing that Bitcoin, if it really has a strong move, let's say this 160,300, if it goes down from that, then it's more likely to settle at or above the last high at 20,000. So somewhere ends up somewhere between 3 at worst, 20,000 at best on the downside. And then, especially in late 2022, 23, I don't know how you could buy something that's going to appreciate more than that. It would have been like buying Amazon at $6 in the 2001-2 crash. $6. And what is it, 3,400 lately? Now that took 78 years. That's still a return you will never see in anything like that. So I that's why I put that last chart up. I see Bitcoin as kind of like Amazon was the mega retailer of the dot-com revolution. Bitcoin, if it continues to do what people expect to do, is kind of like the mega cryptocurrency or standard.
Harry,
So it would have to go up dramatically.
Harry, it leads me to a question. I'm confused. We're a little bit in Alice in Wonderland in the world economy. I mean, the head's fallen off the economic clock. We've got share market's been booming. You've got tech stocks are booming. The property market in Australia is going nuts. Bitcoin's doing well. Gold's hanging in there. You can borrow money for nothing. Yep. It's the world going crazy. What's going on? I'm confused. Everybody's...
It's a giant free lunch. They're saying that it's a giant free lunch. Central banks have purposefully and continuously pushed short-term rates to 0 or negative, long-term rates to 0 or negative, adjusted for inflation. They have purposely pushed this against the markets, okay? When you push down long-term rates, real estate's suddenly worth more because it's against. The 10-year treasury bond is the standard of risk-free rate against which stocks and higher yield bonds and real estate are measured by their risk and potential demographic and everything else, okay? They push those down, which pushes all these financial assets up. What did I say earlier? What's the biggest number in the world right now? $520 trillion of financial assets, 6.2 times global GDP. And you know what normal would be for that? Of course, it's going to be more than GDP, 2 to 3 times. So imagine if they just reset down to that normal 2 to 3 times, what happens to $520 trillion? Poof, and never comes back. It disappears. You won't have to have central bankers of the plan. It will disappear and you will not have to deleverage those financial markets. And that will cause rich people to stop buying yachts and even filet mignon for a while. And it will hit the economy and be deflationary in the economy as well. But what we have to understand here, and this is not what's happened in most of history. Normally they lower interest rates so people will borrow more to spend more, businesses as well. What they did this time, people didn't want that. After the 2008-9 crash, people didn't want to borrow. They already loaded up in the greatest boom in history and interest rates that were even pushed low before that. So what they had to do by accident, when they threw money to save the banks, it pushed up financial assets, and that does make the top 20%, particularly the top 0.1% to 1%. By the way, top 1% spends 20% of GDP, and the 20% spends half of, okay? So they're more important than they sound. And so they've been blowing up financial assets. So I was at a conference with Ray Dalio for Tony Robbins last year. And he was saying, well, yeah, he's got this a long-term cycle. He says, yeah, but he says it's not going to be bad as the last crash because he doesn't see the debt default. I said, Ray, you're the problem. Hedge funds like you owning overinflated assets, $500 trillion, you're the ones that are going to deleverage and lose everything a lot faster than it takes to restructure and write off and go bankrupt loans. So this is unique that financial assets have been used as a method. Quantitative easing is not typical. Lowering interest rates, fiscal stimulus is. Blowing up financial assets to heat up an economy to keep it from deleveraging and deflating is unique, and they call it an experiment. You know what they're going to call it? Stupid in a couple of years. This thing is going to blow up so fast, there's not going to be any way to catch it. Bubbles always burst. I had people, you remember Mark Boris, okay? We were talking about real estate one time I was here. He's the Donald Trump real estate expert in Australia. Wonderful guy. He said, Harry, okay, come on, okay. What you say has to happen? Why can't we just go up here and just kind of plateau and stay there? And I said, Mark, you show me anything that has bubbled like this, real estate today, stocks today, Bitcoin, everything, and just hangs up there, I'll kiss your ass in public because you won't find it. Never, ever happens. Bubbles only burst, and the more you, I was speaking in Dubai one time, and this is the first time it really got payoff. Late 2007, I'm in Dubai, and that was the biggest bubble then. Real estate was in a huge bubble in Dubai, way before ours and way worse. And I'm saying, this is a bubble and this is going to burst. And everybody in the audience said, Harry, you don't understand. The Dubai government is funding this bubble, will not let it burst. And that's when I said, well, now you're really in trouble. If it's mostly because of government stimulation, then they're going to blow up a monster that's going to blow up in their face. Real estate in Dubai went down way faster, way more, 50% the next year when people said the government won't let it happen. You create a monster of $520 trillion, bigger than anything on earth, and you think you're going to be able to control that monster? When you blew it up, it's going to look stupid. Central bankers are going to be erased potentially from history and replaced by cryptocurrencies from the bottom up. That's my scenario. Not going to happen overnight. That's what I see from this industry. I think it's the only answer to the greatest financial debacle and Ponzi scheme in history, blowing up financial assets to save an economy. That experiment, no, that's just plain old, throwing gasoline on a fire. That's crazy to do that.
Harry, look, you've picked a good ass to kick because Mark Boris does have a pretty ass, so you're okay there if you got to kiss one. Michael Turpin, listen, Harry's saying that the share market is going to go to hell in a handbasket along with Bitcoin, and it's all going to happen together. Do you agree with that?
His timing and my timing, I don't think they're cause and effect, but I believe that Bitcoin is going to hit its peak in December of this year, roughly, and that it'll be a slow, it's not going to be a quick crash. It's going to be sort of a slow crash, which usually happens during Bitcoin fall. And then it'll hit the skids, let's say, in the first quarter of 2023. I would say, however, that Bitcoin is not the only cryptocurrency. I mean, it's the one that's worth between 60 and 70% right now. During last bull market, Ethereum got to the point where so fast that it was on the verge of overtaking Bitcoin, and many people think that it can do that again. Ethereum, the number 2 cryptocurrency, which is a younger cryptocurrency, it didn't come onto the market. They had their crowd sale. It wasn't an anonymous white paper from somebody nobody knows. It's Vitalik Buterin, 19-year-old kid. We helped launch that back in 2014, and then it ended up going and building it. Took a year to build. It got on the market in late 2015. It was still under $1 in 2016. So that's not that long ago. It hit its all-time high this past week of 1,450, and there are many people who believe that if Bitcoin hits 100,000, that Ethereum will be 10,000 or above. And what they're saying, back in 2013, Litecoin was considered to be the second biggest. It was the second biggest by market cap next to Bitcoin. They were both tiny. The entire crypto markets were under $1 billion. But Litecoin was it was easier to mine because that's what people cared about. They were mining everything. And so they said, Bitcoin is Bitcoin is gold and Litecoin is silver. Now what they're saying about Ethereum, because it's actually programmable, which Bitcoin does not operate smart contracts, can't operate industries. The two big things right now that are driving Ethereum's growth are decentralized finance, or DeFi, and non-fungible tokens, or NFTs. I won't get into NFTs so much, but it's going to be a big industry. And right now, the early leader is Ethereum, although other like and Telos and Wax are chasing that, where they can go and put non-fungible assets, meaning assets that are one of a kind. And typically those are not securities, so they don't have the same kind of regulatory issues. But decentralized finance, right now, you can get 40% on your money using decentralized finance, 40%. Now you have to work at it. You have to know how to do it. But this is brand new, and because that's happened by basically getting things where you're leaving collateral on one chain and then moving it to another, and you have governance tokens that go up in value. I don't want to go into all the details, but that's the use case of Ethereum. And DeFi tokens have now gone up about from about $1 billion to over 20 billion in 6 months, and some of them have gone up 100x in a year. And they're sort of the next boom. It's not just Bitcoin, it's not just Ethereum. Decentralized finance, I believe, is here to last, because, you know, institutions have only been talking about Bitcoin. If they saw that they could be getting 10, 15% of their money with little risk, because now there's this new wave of CeFi DeFi tokens, where they have a centralized company that then manages this for you. One is out of Thailand, is called YieldApp. And they'll give you 20% on your stable coin, and because they're making 40%. So, you know, it's obviously a very early industry, but there's an Australian company called Royale Finance that takes money that they get from the gaming industry. They're up 5x since they launched. I mean, so there's a lot of these smaller cryptocurrencies that will actually perform much better than Bitcoin over the next year, but you have much higher risk too. Bitcoin is the safe bet.
Mm. Listen, by the way, many people are asking questions and whatever. That's why we've got Aidan on the program later. He's going to be covering a lot of these questions that you've been asking. Now, JP Morgan recently said that the millennials are choosing Bitcoin over gold. And of course, more and more baby boomers are getting involved. I've heard Harry Dent say there's a lot of millennials, but they just don't have any money yet. But obviously they eventually will have money. Do you believe that Bitcoin could eventually surpass the market cap of gold? Michael, do you believe that?
Absolutely.
And when?
Gold is growing fairly slowly. Well, you know, as Harry said, are you talking about, you know, the gold that's in someone's jewelry that they're not going to melt down unless it's an emergency? But 10 trillion, I don't think that that's going to grow substantially. There are gold bugs, of course, who think it will, but let's say it goes from 10 to 12 trillion. Well, I would say the next cycle, we're looking probably at $400,000 Bitcoin. So, you know, do the math, 20 million tokens and 400,000 Bitcoin. It's going to be pretty close at that point.
Mm-hmm. But
you basically have a $500,000, you're there.
Okay. Harry, your thoughts on that one?
Yeah, yes, and it is right. You really have to measure against the investment-oriented goal. I mean, it's ridiculous. People are not going to be melting down their rings and stuff and jewelry. That's 3 trillion. That is an easy target at this early stage. I do think the value of Bitcoin, it's same thing, could be in that range, 8, 10 trillion, and maybe a lot higher, $500,000 to $1 million a coin down the road. But you got to remember, you got to also remember, gold, they say it's a safe haven. Gold went running for mommy faster than anybody when the 2008 crisis got bad, and people could see it was going to be deflation and not inflation. People assume money printing's got to cause inflation, not when debt and financial assets are deleveraging at the speed of light, and that's what they do. It's like diarrhea. I hate to use that term, but that's what it's like when it happens, okay? That's why it's hard to stop, by the way, when it finally cracks. So gold's gonna go down too. I see gold going down to like 1,000 and then growing slowly over a 30-year commodity cycle. So Michael's right, gold does not have the growth path, and it is limited. It only grows in mining maybe 1%, 2% a year historically, and it's not gonna have the growth path and potential is blockchain, because it's a whole new technology. It's like the internet. Gold can never keep up with the internet. So I see it definitely surpassing down the road, and that's what makes it potentially Bitcoin. Ethereum's not going to become a standard for money. It's blockchain platform and can launch a lot of businesses. Bitcoin could get strong enough to be that standard. I do see that is what's the likelihood if it's necessary. Question is, does it, as I said earlier, does this blockchain industry get to the point 5-10 years from now where it doesn't even need that standard? I think it needs, I think Bitcoin is what gives it credibility. The fact that people see it, the best thing happening out there, people calling it digital gold, like it's an inflation hedge. I'm going to say that that's a mistake. It is not an inflation hedge, okay? Hasn't performed like that. It's only gone up in bubbles. Hasn't performed as safe haven yet. Might, I don't think so. But you got to look at what it's actually done. People are picturing that way, but it could become the standard, the large scale standard. Like Michael said, everything's measured against Bitcoin. That's what you want. Whether there's a different coins or different things, that's what makes it a standard, and it has to become much larger and stable. And I think that's the path. My own chart said it could be at $10 trillion, but that's going to take many years to get there.
I want you both to put on your financial planner's hat. Somebody is listening to this program, many people listening to this program. What percentage of their wealth or money they have should they put into Bitcoin? What should they do? I know it's a tough question, but Michael, you've obviously been a man that bit the bullet back in 2007. Sounds like you put a big portion of your wealth into Bitcoin. You took the plunge. It's worked off great. You've turned it into many hundreds of millions of dollars. Congratulations. But what would you tell somebody sitting out there watching this? What would you tell them as a financial planner about Bitcoin?
Well, again, I'm not a financial planner, but what I would say, just sort of based on my knowledge and my own experience, would be, it depends on what your risk ratio is, right? So in other words, if you're 80 years old and you're mainly concerned about income and preserving capital, probably very little, maybe even nothing. Just maybe you put some, 1% in for the grandkids. On the other hand, if you're a millennial or a Gen Z and, you're looking at something that could be life-changing and you've got a long time parameter, you go in and you can put something. Well, I mean, obviously every country has different mechanisms, but they have in the United States, they have these things called Roth IRAs where you pay the tax up front and then you don't pay the tax at the end. Most people go the other way and they go and they do the opposite where they don't pay tax up front and then they pay a boatload down the road. Mitt Romney, who ran for president, made a lot of his money, I think most of it, because he would do sidecar investments from the Bain Capital that he was running, and he put it in his Roth IRA. So he had like, I think, $60-70 million in profits that he never had to pay taxes on because he paid the taxes up front on the lower cost. If you in 2015, put $20,000 into a Roth IRA when Bitcoin was $200, you can do the math. And you would pay no tax on it. Obviously, the reason why Harry and I are in Puerto Rico, other than the great weather and the great people, is that we don't pay any taxes on our crypto gains for the next 15 years. So anybody who's really thinking about putting a lot of money in and has the lifestyle choice to be able to move to Puerto Rico, it's just hit me up. I'm Michael Turpin on most social media, mainly check Twitter and LinkedIn. That's I would say that for most sort of like middle class, upper middle class, families who are maybe say 35, 40 years old, 1 to 5%, they call them portfolio drivers. So in other words, if your traditional portfolio that has been getting you 4 or 5% in the stock market, and maybe you're smart enough to listen to Harry's advice and you pull it out during the bad times and you put it into some other kind of asset class and then you put it back into the stock market, 4% a year is okay, but it's not going to make you rich. Whereas if you took 5% of that portfolio, you put it into something where if it went to 0 or it went to 50% where it was, it's not going to break the bank because you have the other 95% making money. But if it goes up 10x, 100x, and again, here I'm not talking about Bitcoin. I don't see Bitcoin under any scenario going up 100x from now. I don't see 3 million a coin. I did, of course, see 100x back when it was $200. But there are other cryptocurrencies that you need to go, Jim Cramer, the stock guy on American TV says, you should spend an hour a week for every stock you own doing research. if you want to get more involved in sort of the small amount that I've seen many financial planners recommend, 1 to 5%, then you really have to take the time to do the research. Look into go into Telegram groups. Telegram is where almost all the new projects have their community, and you just search things. You go to CoinMarketCap or CoinGecko, which are the two places that list every cryptocurrency. And if you got the time and not the money, or your kids have the time, say, hey, read down and just read the white paper, read what the community says, see what you find interesting. And I also tell people, you don't have to just invest. You can actually earn cryptocurrency by contacting an early stage team and saying, hey, I'm a marketer, I'm an accountant, I'm a business development person. Will you pay me in your cryptocurrency to help out? That's really where I got most of my wealth from in the crypto space. Was I did public relations and advisory services for these companies. Yeah, I bought some, and now I'm buying more because I'm just redeploying things that I think will do better than Bitcoin. But in the beginning, I would have someone pay me, $25,000 when Bitcoin was $100, and it's worth a lot more now.
Michael, thank you. And I must say that's good advice. I think that you need to know what your risk profile is before you do anything like this. And you said that. And I would say to anybody out there listening, go and find out what your risk profile is. What can you take and what can you not handle? Go and see a local financial planner, and they can run you through a risk profile and show you who you are, because it's important that you know what your risk profile is. Harry, your words of wisdom on this question.
Well, right now we've just seen an exponential move, and most of the moves in Bitcoin are made in short periods of time. So the risk has gone up on the downside just because of that. Right now, particularly because of this 4-year cycle, which is still proven until maybe this bigger 90-year cycle might knock it off its chair a bit. I would have maybe 5% at a time like this, and only now that it's pulled back. Now I'm like, okay, scientific method. Okay. I've got all this stuff I've mapped out. I've got my model for .com. If this follows this model and it goes up more this year and then crashes big time into late 2022, I would put a much larger. Now it is way in value. It has proven itself to survive the shakeout, which most companies, there are 8,000 coins and tokens, by the way. ICOs, and this is a great innovation of this industry. Some people would criticize it. I think it's a great innovation. ICOs do not cost and all the regulation of IPOs. So a lot of smaller companies have gotten in, but a lot of those so whoever survives, particularly if Bitcoin survives and is still seen as this kind of standard and this kind of pillar of the industry, I would put a good bit more. And again, risk tolerance, yes, but more like 20 to 30%. Then it becomes an asset class to me. For a longer term boom that should be less volatile, because that's what happens. Things start like kids. Kids start out all young, they grow fast, they're all crazy, they fall down, break all their bones, and then they become adults and they become, more mature and less volatile, most of us at least. So that's the way I'd look at it. Now I'd have a small amount. Boy, if it survives this and does what I'm thinking it's going to do, I'd have a lot. I wouldn't see a better I wouldn't see, I'd rather be in tech stocks or biotech. If this proves this, I don't see what would beat it. So I would want it to be a substantial part of our growth portfolio.
Well, one thing also to note is that the internet didn't really take off until Netscape went public. And I remember when Netscape even got its seed funding, it was just like, wow, all these media companies are putting it in and they're calling it a couple $100 million valuation. They have no revenues. And then all of a sudden it went public in the billions. And that kicked off the entire, bubble of the .coms. We have not had a single substantial IPO in the Bitcoin industry. And Coinbase has filed. And they're about it being, because they have pre-IPO shares available even on the blockchain, and they're talking it's going to go out between 70 and 80 billion dollars. And if that's the case, I mean, that's bigger than Barclays and UBS combined in market cap and Deutsche Bank. I mean, it's sort of like Tesla. Who would have thought a few years ago Tesla would be bigger than BMW, Toyota, and all the other car companies and GM combined? And the millennials are driving a lot of this with the Robinhood trading. And you can bet if they're buying Apple and GameStop and other things like this that don't make a lot of financial sense, that they're going to probably overpay for Coinbase. And Coinbase is going to obviously do well as more people buy Bitcoins because they get nice juicy fees on this. And Binance, did $10 billion of fees last year. That's fees. So there's a number of different places. I believe watching this program is a company called XREX out of Taiwan that uses it to sort of like go and use it to let people go from one currency to another currency. So there's a lot of different areas that are innovated by Bitcoin. There's a company out of New Zealand called Brave New Coin that has indices. I mean, we're just at the beginning of the ecosystem that helps support the next wave. Just like in 2013, what was keeping it back was nobody had wallets. I mean, it's still difficult to buy Bitcoin if you don't know how. And we don't have any ETFs really out there of note. There will be, and I think under SEC Chairman Gensler, because he was a former Commodities and Trading and Futures Corporation chairman under Obama, you're going to get at least one, ETF for Bitcoin approved. We'll probably have the name Goldman Sachs on it, but that's fine. And then all the other countries are going to start doing it. Security tokens. There's all sorts of, things that are in the pipeline that have not hit yet, and so it's going to be a very exciting next 10 years.
Okay, well, I've noticed. When doing my research, you're getting some of the really big players getting on board with Bitcoin and, PayPal and many, many others. And some of the traditional old life insurance companies, which is old money, which is traditional money, they're the last to get on board. And I know some of them are. So it's been an interesting time doing this research on Bitcoin. But look, we've run out of time, and I just want you both to just give us a quick wrap up. And which would be lovely. And I might start with you, Michael, just a quick wrap up. Thank you.
So Bitcoin, Ethereum, and other cryptocurrencies are a market that you should look at if you're looking at investment at all, and you're not just sitting clipping coupons on your zero interest treasury bonds. And the percentage that you put into it should be, sort of marked to your age, your risk appetite. But you also shouldn't just set it and forget it. There's a number of people who say, oh, just hodl, sort of the Bitcoin slang for hold and just set it and forget it. You don't have to be a day trader to recognize the seasons. We're right now, in my opinion, going into Bitcoin summer. It's early in Bitcoin summer. I, basically am hodling my Bitcoin. I don't spend Bitcoin on things unless I think that I can get an even better return. So if I had no Bitcoin, I would be buying Bitcoin right now. But I'm making sure to at least take what I put on the way up when it's double, triple, and then look and see for that telltale sign of the parabolic move. That's when all of a sudden it goes up 25% in 2 days. And, look at what other analysts are saying, because there's some really good ones out there now. And if the consensus is that it's the top, maybe sell 70% of what you have. The other 30% hold for a little while longer, just in case it goes up another 30%. But then once it starts going down, you usually have one little trip back up, so you probably have a month to at least regain most of your gains. But then get the heck out before Bitcoin fall, the leaves start to fall. And then just mark your clock for Bitcoin winter, and you can take, your cash that you now have and look at the decentralized finance, because some great ways of getting much better interest than you're getting, from banks. And by whatever else that Harry's recommending in his fund for like bad times. But otherwise, go and take some time off. That's a good thing to do during the recessions. You're rich with cash now. Just make sure that you set your clock for Bitcoin winter, because if you say put $1 million in and you quadrupled your money, and you want to go in and keep doing this every cycle, you should be able to buy something around 75% off, so you can take $1 million of that and buy back in again and quadruple your money again if the trends happen. Now, the trends typically are less and less of a gain each time. It was 100x between 2012 and 2013. It was 30x between the halving of 2016 and 17. It will be lower this time because the halving was $8,500. We're not going to be 100x. We're not going to probably even be 30x, but you know, we could be 10 to 15x, and you know, some of the higher estimates are around 20x. So you know, I think this is a pivotal time to be in Bitcoin. Obviously, it was better to be there. Look, I thought I got in late into Bitcoin because I got in when it was $100, and I met people who got in when it was 7 cents. And obviously, it wasn't that late.
Okay, thank you, Michael, and thank you for being with us on the program. But just before I hand over to Harry, look, if you want those slides and the newsletters, remember to go to the GoCo Group channel on YouTube, subscribe, and once we post this, you'll be able to get Harry's newsletter. That'll be maybe another 3 weeks, but the slides you can get almost immediately. So make sure you go and subscribe to us as soon as possible after this event. Now, Harry, for your final comments, over to you, my friend.
Okay, I like the last point about millennials. Of course, that's a favorite topic of mine, demographics. It's another good way to picture this. Generations do the same things, buy houses and cars, but they might buy different houses and different cars and stuff. This is a new financial asset class. It is going to be way more popular, and it will be pushed by millennials, and they don't have much money now. I can tell them, you know, Bitcoin and crypto is just a tiny, more like 1% of the financial asset picture, but it's 10% of wallets to bank account. So that shows there's already much wider adoption at a small, there's a lot of little wallets out there with a little in it, is what I'm saying. So the millennials are already farther down the adoption. Yes, they're at the 10% is where it explodes to 90%. Millennials are already there. And as they grow up and get older, they will only invest more and more and more. So they are going to drive this trend. And so you're not just investing in another financial asset, you're investing in a financial asset. And again, you know, my advice when I'm saying, wait for the next crash. And I think it's going to be bigger than the last crashes. I might be wrong about that, but I still stand with that. And you're investing in the millennial, in the financial asset that the millennial generations are going to prefer, especially if you're an older baby boomer like me. So I think, you know, you got two things in your favor, a new financial asset class and a generation that is clearly already accepts it and favors it 10 times more than baby boomers do. And so it just makes it, hey, if it gets down to good value, not there for me yet, it does. I would see this as a very strong opportunity in the next few years, and something that they could do very well. And Michael's right. You're not going to get the 300 every early stage. You're always going to get higher returns, but you're also going to get this higher risk. You're going to see stronger returns than probably most sectors by far, and you're not going to see this much volatility once we get over this next crash, at least by my mind. Aidan Michelson, I've been on, I don't know, probably 4 or 5 tours with him now in the last two or so years before I couldn't travel anymore. I think it's probably going to be next summer or fall before I even have a shot again in Australia. And I just he's been our best up and coming speaker. He knows this topic, and of course, this is a new topic. I just can't stress early stage industries like this and technologies. They're moving fast. They're changing fast. They're young. They're growing. There is no way you as an investor can understand this without the help of somebody who's an expert. And you have that here with Aidan Michelson. And he's proven himself with our audience. He's gotten more and more popular. He knows his stuff here. I mean, I tell you, I would have no shot at myself. Only because I'm in Puerto Rico and have people like Michael Turpin and Alex Lightman who are friends. You can't pay them to be your consultant like Aidan. If I didn't have them, I'd have a really hard time figuring this out. So I say, if you're interested in this industry where Michael and I have both said, my gosh, this is, again, I call it the level of the internet. Imagine if you'd have gotten in the internet in the early 90s and in mid 90s, like he said, when Netscape came out and stuff. So that's where we are on this thing. You need somebody to help you, to teach you, to guide you, because this is a fast growing complex industry. And with that, I introduce Aidan Michelson. Welcome, Aidan.